All right, all right. Let me turn down the music. Okie dokie. Welcome to Forex.Today. Yeah. The YouTube community of more than 20,000 foreign exchange traders. We gather here today to conduct technical and fundamental analysis with the overriding goal of planning our trades. Right, Carl? Let me remind you that trading is risky, not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results. Please stay small, stay humble, focus on the long term, never risk money you cannot afford to lose. My name is Wayne. I've been doing this for a while, so please ask questions and I will do my best to help. You are the boss, I am the servant. So let me know what you need. I'm happy to cover it. Today I suggest we go through, I want to start with the stock market because I think that's going to be our leading indicator for a while, maybe till the end of the year, to see how sentiment may have changed on the short run relative to fundamentals. So we'll take a look at that. I'm sure you want to look at Bitcoin as well. Maybe a double bottom. I don't know. Gold and oil. Dollar and yen. Let me know. Just let me know. If you have something specific like a cross pair, I'm going to ask why. So if you're like, hey, how about this random cross pair? I'm going to ask you why you want to trade that. So make sure you understand the direction that on that cross pair you're trading, but why? Why are you buying one and why are you selling the other and why are you doing a cross pair and not, not a major? So anyways, just don't just say, oh, well, because it looks like my MACD told me. Anyways, that being said, hope you have a nice coffee this morning. Now, in the description below the video, there's a link to my book. Would you please, if you've read it, leave a review on Amazon.com? Would you please do that? Okay. Now, some people's modality is reading. They love reading. Great. There's a book. Everything in that book, even though the book is 12 years old? Everything in there is still relevant and valid for the way that I trade. Isn't that interesting? I haven't changed the way that I've traded over the years. I haven't needed to. All right. Below that, there's also a link to free training courses on the FX Bootcamp YouTube channel. It's 4 videos focusing on technical analysis. And once again, legit. All of it is useful. All of it is me. So you get my point of view. And again, it's the same way. So that was, 10, 12 years ago I did that. And once again, you'll see what I do today is exactly the same as back then. Cool, right? Haven't needed to change. What else? There's a link to fxbootcamp.com. For $88 a year, you get about 88 hours of videos. And then you can also upgrade your account for like $99 a month. And you get live training twice a week. And I'm telling you, it's good. Really, honestly, it's good. Very good. So take a look at that. Also in the description below, you'll find a link to tradersway.com, an ECN that uses straight through processing. So if you're an engineer and you're like, that's all, just give me the facts, man. All right, you click the button on your mouse and you say sell, and they enter the trade into their pool of liquidity providers. You get matched and you're in the interbanking system. Done. There's no monkeying around. There's no trading against you. There's no dealing desk. There's no B-booking. It's just you click a button, you're in the interbanking system, the same as Goldman Sachs, JP Morgan, the Central Bank of Malaysia, whatever. You're just out there, man. Just like you asked. You're like, I like that. Yep, good. Tradersway.com. Oh, let me move this over here. Sorry, as we say in Canada. Sorry. It's one of those words when I apologize, people always say, you say it like you're Canadian. I am Canadian! Jesus Christ! What do you expect? All right. I think I got a paisley tie on for you today. I think maybe later this week I'll bust out one of the 7-fold ties. If you're a fan of Italian 7-fold. All right. So check this out. I got S&P 500. Yeah, boy. Hey, Maida, I'm thinking about going to Cuba. Like, maybe I'll go next week. Maybe I'll just jump on a plane, go for a few days, and come back. Any recommendations? I want to just go start writing my book. I don't know. I want to just go somewhere, write at one chapter. And I just need to break free, right? I need to break free, whatever that Queen song is. And just go and just sit and write and get it going. And I can, right? I can jump on a plane, go to Cuba whenever I want. I've never done it. I've never even been to Miami. But I'm like, oh, maybe I have to land in Miami and then go straight across, right? Oh, yeah. Miami! Every time I say it, I sound like Bugs Bunny. But anyways, I thought about it, go somewhere warm. It's probably the worst time to go to Miami, though. It's probably cool. It's probably windy. Anyways. But I thought that'd be a great way to start a chapter, huh? Start a book on capitalism. All right. Yeah. Well, you know what? I was thinking about going to Nashville and visiting the hotel. I've been speaking with the hotel about setting up our conference in 2024, January 2024. And I might go look at the rooms, like the conference rooms. Santiago says, still warm down here in Miami? Yeah, good. It's cold here. It got bitterly cold last night, like frostbite cold. You're like, holy smokes. Just out of nowhere, it went from cool. It was very warm a week ago. Then it cooled off. And now last night was frostbite kind of thing. Anywho, so last night I was quite cautious. And in many of the cases, the reason I was cautious is because I had to remove monthly targets. And that can be dangerous. Okay, that can be a dangerous decision, but decisions are decisions, right? Okay. Sergio Macanudos. You know, I found in my humidor, I have an unopened box of Macanudos that are more than 25 years old. The box still has the plastic around the box. The box is totally unopened. $25 more than 25 years old. It's kind of like this, right? 30-year-old bottle. So anyway, so now I got like, oh my God, I got the perfect cigars for that port wine. So anyways, I got plenty of Macanudos, but All right. So anyways, what I was saying is that we've hit some monthly targets, and typically I walk away from the markets. I have an opportunity to either take profit and walk away or let it run and walk away. And we might not be in particular talking about gold, but there's lots of dollar pairs and yen pairs, and just, we're there. We're just sort of there in the market. But let me kind of share what I'm thinking here. Those targets are based on what happened last month. And what we have today is based on what happened last week, not what happened last month. Last month may be passé. We have something new going on, a little bit of seasonality, but maybe a shift in sentiment on the short run, meaning for the next 3, 4, 5, 6, 7 weeks, we could have something new in play. Not necessarily fundamental, but sentiment. A relief rally is one way to describe it, right? So it is what it is, and it's real. Okay? I'll look up that restaurant, mate. If I go to Cuba, then I'll definitely go there. I have I don't know the name. I have to look it up, but I have a recommendation of a rooftop deck at a jazz club. But you can go up on the roof, and they have seating, and obviously cigars and fabulous food and live music. And I'm like, oh my God, that's what I want. Okay. Highlander says, check out the perfect Elliott wave. Is that a perfect Elliott wave? Cool. Oh, that's the place? I'm like, that's it? I just named it? Yeah. Well, perfect. Perfect. All right. All right. So anyways, what I've done is removed a lot of the monthly pivots because I don't want to trade based on what last month was, because last month was getting ready for all these big news events, the big week of news from Wednesday to Wednesday, and we've had all that. So now I kind of look at it as something new. Okay? There's something new now. And I can't incorporate that with monthly pivots. I might be able to get it with weekly pivots. I can get it with daily pivots. But last month isn't now. And maybe now will influence next month, but we'll see. All right. So, long story short. The thought here is, if you believe US dollar weakness can continue, okay, if you're an Elliott wave guy, you probably use Fibonacci. It's one way of skinning the rabbit. Okay, not the only way. That's one way. The second way here is using the moving averages. So you buy in the ribbon, like something that occurred here and something that occurred here and even here. Okay. And then third would be using the role reversal here that I've already marked. And, you kind of do one of these things. Okay. Oh, that's interesting. Made it needs a visa to visit her. Yeah. Well, I don't think an Australian needs a passport for Cuba. I'll take a visa. I'll check. So anyways, gold is interesting. And of course, do you remember, let me go further out. Do you remember what created the rally? Okay. Central banks buying gold to prevent devaluation. Sorry, to prevent an increase in valuation of their currency, which is deflationary. So in a weird way, the central banks were trying to create inflation. Then we got inflation. Okay. Notice at the end of last year, gold rallied up. Oh. So now we're getting it in the same period and we have this rally up. So what you would be trading today and the rest of the year would be a pattern like that. Okay. Cool. Interesting. So you can play that game now. Fundamentally, I believe what's being played out here is peak inflation has occurred. Inflation is falling. Remember, I said the gold rallies in a deflationary period. Oh, Maida, there's sitting inside. My ego doesn't fit. I have to sit outside. So, interesting. Interesting. So, if inflation is peaked, and now we'll slowly do something like this. See, this is inflation going up. And now inflation is peaked and maybe going down. So yeah, you can get some up. Oh yeah, I got to bring up that website. Hang on. I got to look at that. All right, I'll look at it later. All right. So there you go. You got permission. So all I'm doing is erasing the monthly pivots and say trade price action. Inflation peaked where? Well, that's the idea of the CPI that came out. 7.7. Remember, it was 8.7. But that's the official inflation. Now, a lot of people will ignore that. For example, the year-over-year cost of food and other stuff required to run a restaurant, okay, is up 27%. So right now, restaurants have 27% inflation. And so when the government comes out and says it's 7.7, restaurants say, not here. So it's not equal for everybody, right? Yeah, mate, I would make the distinction too, where there's, there's nightclub food, but there's also dinner, right? Yeah. Do they still do that tradition where you essentially eat with families in their home, where they're like, it's like a restaurant? Where they cook for you and pay money, but you essentially eat in their home? Or is that just old school? Is it safe to make a decision based on one data point? I don't care about safe. Yeah, that has been changed. Okay. Is it safe to make a decision based on one? Okay, it's not our decision. So one way to look at it, Sakala, is that I don't think, now maybe I'm wrong, but I don't think you have enough money to move the market. So you're not making a decision. And so if there was someone dropping $10 billion because they got out of their Bitcoin trades and they decided to flip over and do something in the Forex market, and they're like, all right, 10 billion here. All right, they're making a decision. Is it safe to make a decision based on one data point? No, in my opinion, that's not proper because that's not a trend, but it is relevant information. It did happen. It did occur. Also, we got through the election, and I did say very, 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 very likely a relief rally in which dollar weakens. We're getting that. Is that right? It's not right. Is it right to make a decision on one data point? No, it's not right. But once again, that's irrelevant to us. We trade the market. We're not supposed to outsmart the market. We're not trying to be the market. Okay? We follow the market. So I break it down like this. If the dollar wants to weaken from now till the end of the year, or let's say to the next Fed meeting, so be it. That's great. Fine. That's what I have to do. But it may not fundamentally make total sense right now. But what I can't do, what would be wrong for us as retail traders, is to trade what is right and proper if, right? How do you say it? Like, we shouldn't try to trade what should be happening. Okay? For us, there is no should. If the dollar is weak, the dollar's weak. That's what's going on. Okay? Enough said. If you're fundamentally a bear, however, then just get the heck out of the way. Or jump on the bandwagon for now and ride out the trend. Okay? So remember, a lot of these currency pairs, I had downward channels and everything. Well, they've broken up through those channels. So it's now technically bullish, not bearish. But you might say, well, I'm still fundamentally bearish. Cool, wait. Then the next question is, well, how long do you think I'll wait? And I'd say back to you, well, probably 6 to 8 weeks. You're like, 6 to 8 weeks? I can't wait and not trade for 6 to 8 weeks. Okay, well, that's where we are now. Those are the decisions you need to make. What are you going to do if this dollar stays weak for the next 6 to 8 weeks? Okay? RSI falling below 60. Yeah, well, you got to be careful, Richard, because the RSI is only, it's not, I don't think is actually doing anything for you in that scenario. So, for example, if it had gone up and lost money, it would have taken the RSI with you and would confirm that that's why, that you lost money. But I don't think it may not actually be adding any value. But interesting. I'm just throwing that out there. That's sort of like extraneous almost. Okay. What do you think on gold, buy or sell? Well, does this chart mean anything to you? Maybe you don't use the daily, so let me drop down into a 4 hour or even an hour. Okay, let's use the hour. Spence, what does that say to you? Yeah. So remember, I don't have an opinion. I just explain what's probably going on here is that we've hit peak inflation and we're going through a disinflationary period, which would be bearish for the US dollar and bullish for gold. I pull up a channel and I mean, yeah, so it's like, I don't have an opinion. Would you sell that? No, it's impossible, right? So the value I'm adding here is I threw away my monthly pivots so that I can just do what's happening and not sort of be caught up in last month's technicals with current sentiment, which changed with last week's fundamentals. So, yeah. So I look at that and that should be self-explanatory. It's absolutely, totally impossible for me to sell this. Darko, no, G20 meetings don't help. Of course, Biden and Xi just met, and I think they're trying to play nice, which is really good. That's the whole point of these meetings, really. Okay. So that could also be dollar weakness, because if we start playing nice with China, not only is Biden doing his thing, like he has his own needs. He needs to work with China, right? To run the United States as best he can, he needs China. But at the same time, we have President Xi, who I believe is in the process of reopening China. And he needs the United States as well. So they're both in that situation where they both wanted to talk. And they made this happen really quickly. They're like, oh, let's just use the G20. And boom, they're meeting. So that's really good. So that weakens the dollar. Yep. Sergey Lavrov, yeah, I don't know about that. Like, does that help at all? No, I don't think so. Okay. So so remember, dollar weakness is good. I just want to make sure everybody knows that. Okay. So anywho, another sign. Did you read about the changes that China's going to have towards the real estate industry? Once again, kind of trying to stabilize their economy. Goldman Sachs on Friday released a report on China starting to stockpile commodities again. So that could be good for our Aussie and our Kiwi, and maybe even CAD. And, it smells, right? It smells like maybe China's going to try to get online by, summer. Okay. Cool. So all that's great. Which could make spring incredibly difficult, where let's say China's reopening and the US is slowing down and dropping into a recession. Maybe China reopening saves the United States from recession. And that could be very, very, very good news. How's this market reacting? Okay. Not quite bullish, but check this out. What do you think about this? What if we start buying down in here? Darko says, so that will be good for EM. Yep. But remember, we're months ahead of the curve, but you could start building that, right? Sakala says, hey, housing data and retail sales coming up this week. How's it going to affect the dollar short term? Does it affect the dollar short term? If an American decides to use their money to buy a house or not use their money to buy a house, or they have no money so they don't buy a house, does it impact the dollar? No. A dollar has to cross a border to change value. If more money's leaving the United States, which we say X minus M, okay? If X minus M is a positive integer, okay? So if X minus M is a positive integer, the dollar weakens. If X minus M is negative, I got it backwards, sorry. If our exports are less than imports, there you go. Okay? And that's good. Why is imports M? Imports. Why is that a good thing? If we import more. Because we would only import if other countries can do something better than we can or cheaper than we can. Okay, that directly impacts the dollar. Because because this means, okay, foreigners buy our stuff, exports, okay? And this is us buying stuff from foreigners. So if we buy more stuff, that means the flow of the US dollar is out of the USA. It goes out to the world. So if we do more business with China, that keeps our inflation low because we're buying stuff for cheaper from foreigners. But the US dollar leaves the United States. The supply of dollars internationally goes up and the value goes down, and that's good. It's good. But if an American sends money to an American, okay, and then that American sends it to another American, and another American sends it to another American, and this American sends it to that, what we call that's the velocity of money. How many times a dollar turns over in the economy? Typically, it's like 2.5. Hey, it could be 5. It could double. The velocity of money in the United States could double. It won't change the value. And so whether you buy a house from an American or not buy a house from an American won't directly. But if the economy is tanking, and that's why Americans are not buying houses from each other. You can't afford a house because you lost your job. Well, that eventually will impact things like retail sales. So if an American, USA, okay, buys, okay, USA loses a job, okay? USA loses a job. An American loses their job. What happens? At first, okay, they don't buy at Target. Okay, so you sell Target stock, and instead they buy from Walmart. So you buy Walmart stock or dollar store. Now, I own 3,000 $3,000 stores, something like that. Indirectly, of course, not mine. Well, I'm a partial owner of $3,000 stores. Cool. It's right. Think about it. Why would I do that? Because the economy is bad. Bought it right before COVID. $3,000 stores. Okay. Yeah, that's through a REIT for sure. I also bought prison stock. My dollar stores and my prison stocks are doing fantastic. Okay. But anyways, let's go back through this. Okay. At first, they shift their spending habits. Okay. From Target to Walmart, or from Walmart to dollar stores. And then they may shift from buying beef to buying chicken, or from buying chicken to buying tuna and pasta so you can make tuna casseroles. Okay. Okay. And you're shifting your purchasing behavior. But if you buy then, let's say, less stuff from Walmart because now you don't have a paycheck, you lost your job, so you stopped shopping at Target, you started shopping at Walmart. Now 4 months goes by, you're out of savings, and so now you're living on your unemployment check. So now you buy less from Walmart. Okay. That means now Walmart is buying less stuff from China. Which means you are not selling the US dollar as much as you used to be. See, when you buy stuff from Walmart, what is it? 99% of it is from overseas, right? So when you see people go into Walmart, now the food might be, let's say, 50-50 American, non-American. Okay. Your grapes are probably from Ecuador and stuff like that. But let's say a lot of the food is American. Then that doesn't impact the dollar. But that TV, those clothes, that, I don't know, that tool, whatever you're buying at Walmart, you're actually selling the dollar because eventually Walmart reorders inventory from outside the USA. So you give the money to Walmart and Walmart sells the dollar. So if you buy less from Walmart, they sell the dollar less because they're buying less Chinese products. So you always got to put that into context. So going back, like housing and retail, right? How does it impact the dollar? Well, one of them is direct and one is indirect. And it also depends on where in retail you buy. Retail gasoline, retail ice cream. Okay. Yeah. Yeah, so Richard says, yeah, that explains market participants. In multinational corporations, a lot of people get really kind of knee deep in the weeds and they're like, we need exposure to international. So they start looking, at really complicated sort of indexes or ETFs or other types of exposure to get international. And they want to maybe like, we want Asia, but ex-China and this, that, and the other thing. They're getting really complicated. You could just buy the Dow. Of the Dow 30 companies, how many of them have massive exposure to international sales? All of them. So why don't you just buy the Dow? Keep your money in dollar. Peter says better than the S&P. Well, Peter trades it because, I think one reason Peter said he traded it, it's just cheaper to trade. But I would say it's not better, it's different. because they're like the old Nifty 50. They're just a bigger, slower kind of index. Slower meaning the companies are more mature. So, like, for example, in one of my Harvard classes, we had this great exercise. I think it was an exam, part of an exam. So about 2 hours into an exam, you get to part 3, and you're like, huh. And they give you balance sheets and cash flow statements of like 5 different companies. And they're without names, right? Describe the type of companies these are, the maturity of the company, and all that kind of stuff. Like what phase of the growth cycle are they, and all that kind of stuff. And it was really interesting to look at the numbers and then describe the type of company. Not that it makes machinery equipment. No. Is it a startup? Is it an old company phasing out? Is it somewhere in between, and why? And it was really interesting. So I would, like, if you looked at all the spreadsheets of the Dow and all the spreadsheets of the S&P 500, they're kind of different companies. Oh, better spread. Yeah. So anyways, yeah, we can look at the Dow. I think we can. So anyways, let's go back to this. I look at this and I want to buy. Okay. And I will show you what it says. Okay, that's what I think. Smell like a plan? Okay, I'm still into that. Okay, now plan B is a long ways off. So that's the only plan I got. And if that don't work none, don't worry about it, son. Okay. Take the course, Sakala. It's free. It's at the YouTube channel for FX Bootcamp. youtube.com/FX Bootcamp. Okay. I think Todd Gordon's doing a paid course too, if you want to learn how he uses. All right, so that's that. I guess we got to look at Bitcoin, huh? Let's get off weekly here. Now we're caught in the zone. Okay. This is, I had pointed this out earlier. So someone sold 18, dropped it down to 16. See you, Bernd. Aaron says, hey, that monthly looks brutal. Well, you know what the chart said was 6,000. Okay, if you recall, we had 16,000, what was it, 290 or something. So we had one number here. I think it was just slightly over 16,000. I can't quite remember. Let me move this up. I think it was higher than that. We had number, I think it was around 16.2. And then the next number was 6,000. Like, holy. Yeah, 6,500. I'm like, oh my God. But that's what'll happen when there's blood in the street. What would the bill? Well, the thing is, it's not the spillover effect of that. That would be the spillover effect. So let's say, by the way, look at my gold taking off, Bubba. Look, it's going. Okay. The spillover effect would be Bitcoin dropping another $10,000. And it would be because some institutions were locked in crypto trades, in particular Bitcoin, and they got whooped. And their clients are reaming them. How dare you invest our money into such risky endeavors? See, there's a lot of people that made a lot of decisions out of greed. They bought it because they might make a shit ton of money. But a lot of institutions couldn't do it because it's not regulated, for example. And it's in their mandate that it must be regulated. And so maybe some hedge funds found a way to get into derivatives and all this kind of stuff and indirectly get in. And some of these institutions may have bent the rules and all that kind of stuff. But there are large players that were exposed to that risk and now got crushed. And if their exchanges have gone bankrupt or closed or frozen or secondary, like let's say, I'm not saying this is happening, but like for example, Coinbase I think has $6 billion in cash. Well, what if they did something different with their cash? See, FXT did things with their cash like invested into hedge funds and venture capital funds and stuff with their cash, which is illiquid. So now suddenly they need their money back, and the venture capital firm says, well, we don't have it. We deployed it. We invested it. We can't get it back. You have to wait for an illiquidity event. So maybe in 5 years you can get your money back. 5 years, we needed 5 hours. Sorry. All right? Like it's just not there. So if you were dumb with your money, like FXT, or even criminal like FXT, right, now you're in a world of hurt. So if Coinbase had stuck their money into venture capital funds, or actually invested in FXT, or became a venture capital fund themselves and started investing into a whole bunch of projects, they wouldn't have the cash. They might have the assets on the balance sheet, but then when they need the cash, they can't sell the assets on the balance sheet. So their balance sheet is BS, and then you find out they don't have the cash and they can't cover the margin calls and stuff because of FXT. So those are the ones that get destroyed, right? And so that could drag down some. Now hedge funds might be reporting maybe redemptions if they're a crypto related fund, or if part of their fund was invested into crypto and now they're getting destroyed. You know, that could take more market participants out of the market. So think of it this way. Bitcoin going down probably isn't people selling Bitcoin. Bitcoin going down is people getting out of Bitcoin Okay, you see? And so if there's some big news like there's massive selling, forced selling, because hedge funds are being shut down, hedge funds are being crushed by redemptions. Let's say some dumb pension fund somewhere made a big bet and now they got to just sell at all costs. See, that's what blood in the street is. Sell at any price, get out at any cost. When you get that, then that hits other people and then they panic. It drops again. So imagine it drops $3,000 in an hour. That hits people's stop losses. It drops in the next 3 hours another $3,000. Then that forces by mandate other funds to get liquid, which means they dump their Bitcoin position. And then now it drops another three, and then there's panic, and then everybody is selling anything at any cost. There's no logic, no reason, pure panic. And that's when we get down to 6,000 or less. Okay? Okay? Could be interesting. Now, that could happen in the stock market next year if China doesn't reopen, because then there wouldn't be anything left for us to invest in. Everyone would be going back to cash and then locking in bonds when the Fed stops raising interest rates. You do know that, right? Let me talk about this for a second here. Let me look at assets for a second here. Platinum. What else do we have down here? We have a bunch of new assets now that we can trade. Chainlink. New liquidity providers, I guess, huh? I don't have it here. Okay, let's talk about something. How do you phrase this? Do you want to talk about something that's going to make you a lot of money next year, potentially? Richard, you have to understand he never had the net worth. You can't lose 50% of your net worth like that. Okay. All right. When will the Fed stop raising interest rates? You know what? No, I'm going to keep this for our live trading group. Forget it. Join FX Bootcamp. Forget it. I was going to give you too much. Let's move on. We had to talk about exotics. Okay. Analyze any pair without any indicator. I basically say that that's what's going on here. Yeah, Aaron, but that's already what's happening right now. That's why gold is rallying. And why are they slowing down? We've hit peak inflation. So that's already occurred. Okay, Aaron? All right. So anyways, that's what's going on. I've doubled down on dollar weakness here on my carry trade. Okay. Okay, so you can see I've been selling the dollar since October 20th. Actually, probably more like October 25th. It was, it's a simple trade. Be a simple kind of trader. All right. Okay. Something like that. Yeah, thank you, Jim. Yeah, by the way, I guess because of the holiday on Friday, COT wasn't released. I don't understand why they do that. Like, does it take a person to release the data? Like, really? There's a person at the government that, submits an Excel spreadsheet? Really? I find that amazing that a machine doesn't just do everything automatically. When the machine takes a day off for Memorial Day or Remembrance Day, I guess we call it in Canada, Remembrance Day. Kind of interesting. So anyways, we didn't get COT data, so I guess it's going to be what, tonight, 4 p.m.? The machine unit, yeah. Hey, if I went to Nashville this week, let's say I decide to go to Nashville, I think it's more likely than Cuba. I think my wife would kill me if I just honey, it's cold outside. I'm going to go to Cuba. You think my wife would kill me? Uh-huh. Oh, I think if I go to... Yeah. So how about this? If I go to Nashville just to check out some of the rooms, does anyone want to meet me there? We can check out the rooms in which I can do the conference in January 2024. While you're there, we could have a wine and a steak dinner. And then you go home the next day and I stay one more day and I start writing my book. Lucas is on Zloty? That's interesting. When? I don't know. I don't know. I have to contact the hotel or something, but I don't know. Tomorrow? I don't know. Wednesday? But then that means I'd have to work Thursday, and Thursdays are tough days with swing trading group and stuff like that. That's not a good day for me to be there. So a Wednesday would be better. I could do my morning session Thursday, drive home and do the afternoon session that day. So Wednesday night. Mahir says it's instantaneous report, not historical. Yeah, and I thought that was interesting because the data that didn't come through from the COT data that didn't come through included the historical didn't come through. Like on QuantBox, the historical data is gone. And the way the API must work is like you said, it's instantaneous. So it posts the historical. And I guess the way that we've designed it is we're not saving the historical, but maybe I need to change that because when the COT data disappeared, all of it went away. So it's not like it didn't update from last week. It was just all gone. And I thought that was interesting. Where do you learn from trading? Can anybody help Vince find a place to learn about how to trade Forex? So Does anybody live within like 5 hours of Nashville, Tennessee? Which broker am I using? This is tradersway.com. Okay. Yeah. Yeah, that's too far, Lucas. Yeah, it's too far. Oh, I think I'm only in the one trade right now. 2 trades, I guess. 3 trades. I'm in 3 trades. So I have 330 pips. I basically didn't trade any of the volatility last week. So like, let's explain this, right? The volatility last week took place in this period here. And in that window, I see risk. Okay? So WWWD. What would Wayne do? Okay? Trade before the risk, trade after the risk. Yeah, I get it, Jimmy. I just thought, I don't know, just popped up. $13 away. You're Jersey? Didn't know that. Yeah, 11 hours. Yeah, that's too much. That's too much. But you know, the reason I picked Nashville to hold our 2024 conference is it's just cheap to fly into. And the hotel is epic. Like you'll walk in, you're on a freezing frickin' day. You'll fly in and just your limousine ride will be cold from the airport. You're like, gee whiz. And then you'll show up to the hotel and you're like, oh my God. Oh my God, Becky. Yeah. So anyways. Yeah, but I've been to South Africa and did that. Right? I was in Johannesburg. Where were you? So anyway, so that's something we can do if anyone, right? So I don't know. I'll think about it. I need to make phone calls. All right. So anyways, that's how you play that. Let me remove some risk here. What do you think of my entry? Ripper tight. Okay, look, I cannot lose money. Look at that. Impossible for me to lose money. But I do need to go back to South Africa. I'd be all right. I'd like to see Nigeria. I'd like to see Kenya. Right? Be interesting to just travel around. I'd like to fly over the Congo from Kenya to Nigeria. Hey, there it is. Cool. Keep going, son. Keep going. Yeah. Well, Nigeria is interesting What's the main city again in Nigeria? I'm having a brain fart. Gee whiz. Lagos. It is Lagos, is it? For some reason, I had Lagos, and then I was thinking, no, that's a country. No, it's not a country. It might as well be, right? It is Lagos. All right, well, that's the word I had in my brain. It's the largest English-speaking city in the world. Yeah, I would imagine so. I would imagine so. Lagos. The largest English-speaking city in the world is Nigerian by population. So, man, you got to see that, huh? Oh, who is that? Wayne, there's a guy in my country who's been following your content on YouTube. He is now more of a Forex celebrity in my country. Right on. Who is it? Okay. We'll move over. Let's get over to the dollar proper. Okay. So this is from yesterday or last night. See, the day trading group meets on Sundays. Okay. Look at that. Okay. And now we're on the next target. Okay. Now remember this channel here, we had put that when it was still a down channel, remember? And I said what you're trying to plan is at what point does that channel overtake this channel? And that's the break there, right? Okay, so anyways, challenge yourself by changing the way you're look at the same thing using different tools. See how you feel. Let's do this, for example. Okay? For example, let's do that. Let's do yellow. Okay? Big move, that's fine. Higher low. Shields up, red alert. Okay? Is it bullish yet? No. Higher low again. That's 3 higher lows. 1, 2, 3. 3 pregnant nuns. That's the 3 pregnant nun, right? Okay? Then what? Higher high. Ha ha. Ha ha. Hu. It's important. So you mark it as continuation. Nice. What does that mean? There's going to be a higher low. Now you would think this is what you would plan, but that's why you put your stop below the lower low. So you would have bought, in my humble opinion, you would have bought somewhere around here, and you can see somebody did, and then you'd put your stop here. So you survived. Check this out. Continuation. Okay. And now you're way the F up there. Okay. And so now your job is likely somewhere, okay, you're in this sort of buying dips mentality. It's so easy when everybody's trying to trade me, baby. All right, so let's take a look at another one. Let's do this one. I still love you, baby. Okay. What do you think about this? Probably a change in direction, change in trend. Huh? Okay. Oh, thank you for subscribing, by the way. I noticed a few new subscribers have jumped on board. Welcome to the community. I will do my best to serve. I appreciate you being here. There's a lot of new questions today, which is epic. I love that because it keeps me sharp. I don't know what you know, and I don't know what you don't know. And many of you don't know what you don't know. So you're seeing things for the first time, and it brings me pleasure to share. Have you ever seen a funny movie and then you watch it with the crowd? Or maybe a scary movie or something. Let's say it's a scary movie. And then you watch it with a friend and now you watch them get scared. It's awesome, isn't it? And then you turn, you're like, I know, I'm right. I know, right? That was so scary. I freaked out when I first saw it, right? Like that kind of stuff. It's like you're seeing it for the first time and it brings me joy. You bring me joy and happiness. But of all this, you bring me love, right? I don't know. Anyways, welcome. So here's what I'm looking at. Is this relevant? Yeah, it could be. Right on, Jimmy. Yeah, I did, as far as those exotic trades have done all right, of course. I like the fact that I'm showing you how to front run risk, but also collect carry. So again, that Mexican peso trade, that was from a question that Darko had a week before the election. We were talking about the risk. And we were also talking about seasonality, and we were talking about relief rallies after political events. And he's like, well, what if we wanted to front run that? How would you do it? So that was the answer to it. It's a brilliant question. So we did it. And I said, that's how you do it. So I shorted the dollar a week before the risk. Then it went, all the risk went through. I survived all the volatility. The outcome was dollar weakness, and now I'm getting paid and it looks easy. Yeah. Look, guys, for everybody that's here, if you want me to come to Kenya, just help me pay for everything, and I would love to go to Kenya. So the best way to do that is to put together 50 to 100 people that are willing to pay money for a day or two. Usually it's like a one-day presentation at night. We have cocktails and a meet and greet, and we're all good. I don't need to be there a week. I just want to meet people. So a couple of days in Kenya and then fly back home? Shoot. Yeah, let's do it. But you got to help me cover all the costs, right? But I'd do it for sure. That's how I went to South Africa, by the way. Our buddy Ryan said, you need to come to Johannesburg. I'm like, you need to kick down my door and make it happen. So he did. He kept emailing me day after day after day. I'm going to set up this conference. I'm going to do this. I'm going to do that. I'm going to bring all these people in. I'm going to start selling tickets. I'm going to start selling tickets. You're going to come to Johannesburg. Then he's like, boom, I got 300-400 people. You're coming. I'm like, oh, good. Let's do it. Boom. Booked it, flew out, spent 2.5 days there, flew home. Didn't stay for the cultural tour. I would have loved to have seen the Kruger National Park and stuff, but I had to get home. I got things to do. So I had a couple of great days in Johannesburg, did a lot of training, met a lot of fantastic people. In and out, long gone. Boom. That's how you do it. I loved Kenya. I'll go almost anywhere. I've been most places on earth, except Miami. I don't know why. So, like, I'm open-minded, man. Let's go. Let's do it. I've flown to Abu Dhabi for lunch. Let's go. Okay. Okay. So anyways, look, I'm trying to show you the same chart from different perspectives. Remember, all market participants are on different time frames. Okay. They have different points of view, and we're trying to line these things up. So like on a monthly point of view, I would not be shocked if we get a scenario like this. This is monthly now. Okay. Oh, 4 sessions. So we can use that. Let me load that up. Where do I have that? Automatic trend lines, money, strategy, trading sessions. This one. Okay. So once again, now we're on an hourly chart, euro dollar. And it has to go up now or it's not going to go up today. So if you're using this time frame, I would draw this across and set it up like an inverse head and shoulders. Oops, hang on. Let me make that a little more realistic. Okay. Yeah, it's called 4 sessions. Now, what I do, for example, I tweak them and stuff to get what I want. So when I use this one, I call this price action template 1 hour 21 EMA traps. So I've combined a bunch of things together. I think this might not actually be a 21. It's actually 55, but it's trying to show me the 21 on the 4 hour. I know I'm being a little finessey here. It's the 4 hour 21 described as a 20, right? It's a 20. So I'm showing it like it's a 21 EMA. Because of the color. It's a 55, but I'm thinking 4 hour while looking at a 1 hour chart. Okay. And you're like, Wayne, that's a little too much. Okay. But nonetheless, let's go back to the 1 hour. Okay. This is a bullish trade plan. Okay. Now there's supposed to be a trap in here. So I will drop into a smaller time frame. And here's the trap. You see it? Now, when people took my oil trading course, it came with 4 or 5 trading strategies. That's what a trap is. And one of the trading strategies for oil, I know it's just oil, and this isn't oil, okay, but makes this a logical buy. Isn't that interesting? So I have that. So to do that, I got a lot of different indicators going on here, showing short-term direction, showing the zone. Here's the US Open. Okay. So this here where it says America 191, that's the open of the market. Okay, not the stock market. It's actually oil market. But nonetheless, I call that the open when I'm ready, willing, and able. Pa-chow, pa-chow, pa-chow. And now you hold on for dear life. It's like riding a bull. You're hoping that, but you're not sure. Okay, but you've got your stop or break even. So you can combine a lot. Okay. Okay. So anyways, you know what? I'm done. That's plenty. How long have I been going? I don't know how long I've been going. It's been an hour and a half, hasn't it? Yeah, that's enough. Yeah, that's enough. All right, so I love you, babe. That was real. I got to jump. So I'll see you at 4 p.m. if you're in my day trading group. Remember, we met last night at the market open, and now we're meeting again tonight. That's what you get in the day trading group. Sunday nights, we're setting things up. Now, to be honest, my value last night was minimal because I said, look, I see risk all over the place, but there's also new opportunity that's appeared, and it's a difficult one. I said, so, we talked about removing things that give you the opportunity, but it comes with a risk. The analogy I used comes from the movie Black Hawk Down, where they were going in to Mogadishu to provide some security for a mission that was happening. And some of the guys said, you know what? You don't need all this crap. You don't need to bring water. You don't need to bring, all this other crap with you. And then some of them started pulling their body armor out, the heavy metal plates that go in their back. Oh yeah, it'll be lighter. It'll be easier. But the guy got shot in his back. If he had left the plate, right, he wouldn't have been as wounded. I don't know if he died or not in real life. But I know people that knew people that actually were in that mission. So it's a real thing. Like, you got to be careful when you remove some of the protection that you use on your charts to keep you from chasing price. It's very difficult. Sometimes in certain circumstances, you have to use it. And today or last night might have been one of those times, but it's always very dangerous. And you can see in this case, like even pound dollar, okay, is behaving the way you would have expected, which means you could have got shot in the back last night if you removed your armor. Steven said that guy did die. Okay, yeah. So it's a very dangerous decision to make. And that's what I expressed there, where none of that advice probably makes you money. But if you're trying to grow as a trader, identifying the risks learning how to identify the risks are important, because you won't know the sniper is there until somebody gets shot. Or you got some tough son of a bitch that's been there before and he can anticipate where the sniper would set up. So nobody needs to get shot. And sometimes that's everything. Okay? Back in an old business I used to run way long time ago in the early 90s, one of my first businesses, if you want to call it, I wasn't incorporated, but hey man, I was paying my bills. One of my very first businesses, I used to hire a bunch of retired people. I literally walked into an old folks home and says, "Who needs a job?" I've just figured, hey, old guys have, right? Old guys got things to do, or want things to do, right? Old guys want things to do. Walked right in there. Who wants a job? They're like, what? I'm like, yeah, I'll buy you breakfast. I'll listen to your war stories all day. And then I'll pay you some money. I had old guys springing up like they were 20. Right? So anyways, one of these old guys who served in the Pacific in World War II, we were talking one day because the job I gave them was a 2-hour drive away. So we had plenty of time to talk about the war. And he said to me, he said, "Wayne, do you know what the odds were when we landed on a Pacific island? Do you know what the odds were when you know your platoon or your what do you call them? Your chalk, your stick, whatever, every branch. Forget, I think he was a Marine. But basically, imagine you land, you take a beach. Great. Now you got to go inland and go find where the enemy is, right? So you get, 10, 12 guys and you go for a little walk through the jungle. Up the hill, right? Anyway, so he said, do you know what the odds were that someone was going to be shot by a sniper? Do you guys know? What would you think? This was a question he asked me. He said, "Wayne, when you're walking up there, when that was your job, do you know what the chances were? The odds of being shot by a sniper?" It matters if you've been assigned the lead. All right, Aaron, you take the lead. We're going to march up this hill. What percentage? 100%. 100%. You were going to get shot. You're on point, Jim. The thing is, it's helpful to have the experience to know when danger's close. And that's true in trading as anything else. Okay? Danger close. So that's kind of, yesterday was sort of danger close where, yeah, that's all. You got to be careful. If you decide to pull the body armor off, remember it comes with a potential risk with it. So anyways, if you're in my day trading group at fxbootcamp.com, I will see you at 4 p.m. to set up tomorrow's trades. And for everybody else, I invite you to join FX Bootcamp. It's only $88 a year. That's it. Come on. It's not a lot of money, but it is a lot of help. It's not a lot of money, but it is a lot of help. I promise you that. Trader's Way is an ECN I recommend. Tradersway.com. I'll see you guys. Ciao.